Today marked a significant moment as the Finance Minister unveiled the Comprehensive Budget 2024, a financial blueprint that the middle-class taxpayers have been eagerly waiting for. They hoped it would offer a substantial tax relief, including lowering of the tax rates and increased deductions, which would in turn enhance their disposable income. This budget is notably the first full budget after the recent elections. Given that the interim budget did not introduce any significant changes, the expectations were particularly high for announcements in an effort to align with the government's commitment to tax simplification, enhanced taxpayer services, assurance of tax certainty, and a reduction in legal disputes. The Finance Minister has introduced a series of reforms to the direct tax system in this budget. First and foremost, she announced a comprehensive review of the Income Tax Act 1961, which is proposed to be completed in a period of 6 months to make it more concise, easy to understand, with an intent to reduce tax litigation and provide more certainty to the taxpayers. To provide relief to the middle income taxpayers, FM has rationalized the tax rates under the new tax regime. And has allowed a standard deduction enhanced limit of 25,000, taking the standard deduction of current limit of 50,000 to 75,000. The new tax regime continues to be the default tax regime of taxation, and the government continues to make it more attractive by providing more incentives. Another big change is on the credit of taxes collected at source now will be available against the taxes withheld on the salary income of the taxpayer, which will ease cash flow issue for the employee and avoid potential refund claim at the time of filing of the tax return of income. Further, deduction for employers' contribution to NPS has been enhanced from the existing threshold of 10% to 14% under the new tax regime. With an intent to resolve the income tax disputes pending in appeals, the FM has also proposed the Vivad Se Vishwas Scheme 2024. She has also proposed an increase in monetary limits for filing of appeals related to direct taxes in tax tribunals, High Courts and Supreme Court, and these limits have been increased to 60 lakhs, 2 crores and 5 crores respectively for these three appellate authorities. On the capital gain, the FM has made a lot of changes and rationalized the capital gain tax regime, and this has been done effective 23rd July 2024, which is today. Short-term capital gain tax rate on sale of equity-oriented mutual funds equity shares has been increased to 20% from the existing rate of 15%. Short-term capital gain on sale of other financial assets will continue to be taxed at applicable tax rates. The FM announced that the long-term capital gain on sale of all financial and non-financial assets, it will attract a tax rate of 12.5% as against the existing rate of 10% or 20%. Additionally, the limit of exemption for long-term capital gain will be enhanced to 1.25 lakhs per year from the existing threshold of 1 lakh per year on the STT paid equity shares or units of equity-oriented mutual funds. Unlisted bonds and debentures, debt mutual funds and market-linked debentures, they will attract tax on capital gains at the applicable rates irrespective of the period of holding. The FM has also brought uniformity in the holding period of capital assets. All listed financial assets shall qualify as long-term if held for more than 1 year, and all unlisted financial and non-financial assets will be considered long-term if they are held for more than 2 years. The indexation benefit, this is a big change, for long-term capital assets is removed for calculation of long-term capital gain arising on transfer of property, gold and other unlisted assets. While the budget has provided relief to the middle income taxpayer in the form of standard deduction limit being enhanced and rationalization of the income slabs under the new tax regime, but the increase in the long-term and short-term capital gain and withdrawal of indexation benefit may not really go well with the taxpayers, and also the individual taxpayers were expecting increase in the basic exemption limit of 3 lakh to be enhanced to 5 lakh, which has not happened. These were the summarized proposals impacting the individual taxpayers as per the Union Budget 2024. Hope you found this useful and educative.